was mentioning, we were in Charleston this weekend, and Taylor was able to jump into some files that I have and send out updated pre-approvals to people for me. So, even if I'm in a meeting or in a Zoom training like this, someone on my team can still be there handling it if anything was to pop up that I can't get to right now. Originally from New York, so big Yankees and Giants fan. Been in the Fort Mill area for a long time. Went to high school here, went to Winthrop for my undergrad, and West Virginia for my master's. So I'd like to give back to the community. I'm a Charlotte firefighter. I was a Fort Mill firefighter, along to doing the lending. Me and my dad also own Clean Eats Fort Mill. So if you guys ever need any catering for open houses or or just meal planning for yourself, we can help you with that too. And I also have a personal training business that I switched to online. I had a training studio in Fort Mill. So fitness is a big part of my life. But yeah, there's an overview of my hobbies. Let's see if I can, Tommy, it's saying host disabled participant screen sharing.
Yeah, so let me stop sharing my screen. So for those of you who are just getting on, so we're in module 8 of Rev Up, Financing the Sale. And we're talking to Matt Brady with NFM Mortgage. NFM Lending, I guess I should say. Yep. Okay, you can send over the invite.
Nope, it still won't do it.
Okay, hold on. Let me check something out here right quick. All right, should be good now.
All right, there we go. All right, so like Tommy said, basically what we're going to go over today is a guide to the home buying process. If you guys have questions, just let me know. If you have, we can answer them there or answer them at the end, whichever is easier for you guys. So first thing, we're with the Taylor Group of NFM Lending. There's Taylor and Chris, who are the branch managers. And the Taylor Group of NFM Lending is a boutique, 100% in-house residential lending team. And that's important because everyone from every step of the process from pre-approval to closing is handled by our team in-house. The LOs, the processors, the underwriters, the closers. And this results in a consistent, efficient process and control from beginning to end. So you're not dealing with someone, in California for one part and Ohio for another part. Everything's in-house in here, which means we can turn loans fast. So 30 days is the norm for us. We can turn them sooner if we need to. Our processors actually get bonus when they get clear to closes 3 days earlier.
Real quick, sorry to interrupt, but is everybody's screen like mine where it's like stretched out? Or is that just my screen?
Mine looks fine.
It does? Okay. I don't know what's going on. Mine's like it's off to the sides, and I wanted to make sure that everybody's wasn't like that. That's okay. Okay, sorry.
So NFM Lending is a national correspondent lender. So that means we have access to every loan out there. USDA, VA, conventional, first and seconds, jumbos, pretty much anything out there. The only thing we're not doing right now that we're waiting for corporate to let us back into doing is construction of perm. But we had those before COVID. We're just waiting to get those back in. That also gives us competitive rates. And we take a personal approach to the mortgage business, customizing a plan that meets a client's individual needs and goals. And that's partly goes into the next slide with me is I'm big in talking with your borrowers and figuring out what's important to them and then structuring the right deal that's best for them right now, but for them long term. So I'm a licensed loan originator in North Carolina, South Carolina, Indiana. I've prior experience in the real estate industry as a licensed realtor in North and South Carolina. A certified mortgage advisor, meaning I understand that getting a mortgage is more than just pressing buttons. It means I'm an educator or partner in the home buying process, not just for the borrower, but for you guys. And Barry Habib, I'm not sure if you guys know about him, but he's one of the big people in the housing industry. He's actually won the Crystal Ball Award for 2018 and 2019. You might even want it for 2020 for predicting the market and how it's going to go with rates and everything like that. And he even brings it up where he says the best rate with the wrong strategy is more expensive than a competitive rate with a certified mortgage advisor. So we can do a lot of tools for your borrowers. Just reach out to me and we can do rent to buy comparisons, cost of waiting, thinking that they're going to get a better rate down the line, but what's that actually costing them? Marketing reports, bid over asking tools. I've used this for Lauren for some of her buyers. We're in this competitive market. If you're going to go over a certain amount, we can give them an estimation of when appreciation and everything, and they'll make that money back. So that's really important in this times, and using all these tools, especially if you have first-time home buyers that are paying $1,800 a month in rent. They could be buying a $300,000 house, and we can show them those comparisons. We can do loan comparisons, and that's even good for your open houses. Is I can give you sheets with an FHA, conventional, USDA if it's eligible, so you can have more of that info for your people. And it just helps you guys stand out as that local expert, because I can give you customized material also regarding rates, regarding housing, whatever, is best for you guys. A little bit about how the Taylor Group's different than some other lenders you might work with. So like I said before, everything's in-house. So we control the whole process. Our underwriters only work on our loans. We have 5 underwriters. We have a closing team. We have an operations manager. So we can speed up the process when we need to, and it's not a question of where you're at. We can get you an answer, within minutes, to where that process is going for you. You get automated text and emails throughout the whole transaction, so you should be getting some correspondence every 2 to 3 days as you hit a new milestone in the process. We can partner with you guys on open houses, broker events, first-time homebuyer events, and that can even be online, virtual. I did actually one of these when we were in Charleston. So happy to help you guys out any way we can. Give you access to our corporate marketing team. So if there's any co-branded materials you want, rent to buy comparisons, the home buying process, the difference between pre-qual and pre-approval, any kind of marketing material that you think would benefit you guys, we can help you do, and we can co-brand with you. You can also get list reports if you guys don't have one. Just reach out to me after this. I'll put my contact information on here, and I can give you a free list reports. It gives you a daily shareable, but then you also can do, it's great for your listings because it will automatically populate. Once you put a house on the MLS, it will automatically populate a 25-piece marketing kit. It will have Facebook stuff for you to do, infographics, just a lot of cool information that you can also customize too. So just let me know if any of you guys want that free account. Now more on the lending side. So say you have a client that wants to qualify for a loan and their credit's too low, or they want to qualify for a better rate. What we can do is when we pull their credit, we will see their potential rescore options. And that will let us know exactly what they have to do to get to a certain credit score. It'll be like, you have a 96% chance of getting to a 680 by doing this. They send us that information. We will send off for a credit rescore for them, no cost to the borrower, and it will take 5 to 7 business days to do. So like I said, that's something where you don't need to wait for 60 to 90 days for their credit to improve. We can give them the tools and the game plan to do that and get it done in 5 to 7 business days once they give us the information that they need. Another thing in this competitive market we do, so we have pre-qualifications, pre-approvals, and then certified pre-approvals. And I'll go over all that in a second. But basically that just means they're underwriter pre-approved, which means you have a faster closing, you're the next best offer to a cash buyer, and we can close faster. So we can close in 25 to 26 days, maybe even sooner. It will just depend on the appraisal because we have all their paperwork already. We have already verified their assets and everything like that. And that is also a tool that you can use where I can call the listing agent for you and say, hey, so-and-so is already approved by our underwriter. Their assets are good. Their DTI is good. They're good to go. We just need an appraisal and inspections, and you guys can close faster then. So that's another way to stand out. We also have hybrid e-closings. So what that means is we can only do these on conventional loans right now, but this is, they get most of the paperwork except 3 to 4 documents before closing, and they e-sign those. So then when you're with the attorney, you're only there 10 to 15 minutes. So it's safer, faster, and more efficient. You don't have to spend an hour at the attorney on a closing day. You can get in and out, the borrower can get in and out, and it's just a faster process. So you can get back to doing what you guys do well, and that's selling more houses and just reaching more people.
Hey, Matt.
Yes,
can I
sir.
stop you? Since you're the host, do you see people waiting to get in? There should be two.
Hold on one second. I might have to,
Should be a pop-up on your screen.
hold on. Arrow bill.
And I wonder if I reclaim host, if you can still
Here you
show
go.
your PowerPoint.
There you go. They should be in now.
Okay. Gotcha. And I'm not sure why it's not doing the co-host thing. I'll have to figure that out.
No worries. Another thing that we're going to be introducing starting this month is lock and shop, to where someone can lock a rate for 90 days and, you know, have that rate locked in. And then there is a fee if the rates do go lower, or they can drop the rate to do it, but there is a fee to do the lock and shop. So it's a 90-day lock. We're also doing 6-month extended locks. And I will get Tommy more of this information on here on these things, because these are just something that got introduced today that Taylor wanted to make sure I did make a point to bring up to you guys. So the lock and shop's a 90-day where you can lock it in for a fee, but then, you know, if rates get lower, you can take that lower rate. And then we're also doing 6-month extended locks, which is good, especially for your new construction people, that, you know, they can lock in a rate now and not worry about the market 6 months from now, which would be good with how rates have been steadily ticking up now. If you guys weren't aware of that, where they were 2.75 2 weeks ago, they're now 3.25 or 3.125. So this is a big thing. I'm guessing, are most of you guys newer agents, Tommy, that are on this?
We have a mix, but yeah,
Okay.
we have a lot of newer agents in our firm right
Okay.
now.
So this is a big thing, pre-qual versus pre-approval. So when you're talking to a borrower and they're like, oh, I'm already pre-approved, and you say, oh, so you already sent your documents into the lender? Oh, no, I haven't done that yet. They're not pre-approved then. They're pre-qualified. So pre-qualified is just the first step in the home buying process, and it's how much you're approved for based on the information that you gave. No verification yet really on their income or their assets. It's basically you're taking what they put on their application and seeing what they would be approved for. The next step would be a pre-approval, and that's where myself or my assistant review their income and asset documents to make sure, yes, the income is what they say it is. They have these assets. But we go a step further with the certified pre-approval, and that's where the credit, income, and assets have reviewed by the underwriter. That usually takes about 3 to 4 days for that stuff to come through. But you know, you can still do an offer with the regular pre-approval, with the regular pre-qualification. But when we have that certified pre-approval, it just makes you a stronger buyer. And we can tell that to the listing agent that, hey, they've already been through our underwriter. They're underwriter approved. We just need that appraisal and we can close. So how we determine your approval, and it's CIA. So it's their credit, their income, and their assets. So with credit, we review their credit to make sure they meet the minimum score requirements, confirm all their debt obligations, make sure they don't have any foreclosures, short sales. Depending on the loan, there's difference on how long those can have been. So that's why it's important that, you know, we get that information out there. And even if it doesn't show up on their credit, I have seen it show up later in the process. So that's why it's important that the borrowers are upfront with us and being, because we will find out. Even if it's not on their credit report, that stuff will come up. Income, we'll review their employment history and income to determine qualifiable monthly income. So for newer agents, if you're planning to buy a house in the next 2 years, remember, as a 1099, we need 2 years of tax returns, and it's not your gross income like it is with a salaried employee. So say you guys do great this year and you make $100,000. You don't want to pay a lot of taxes, so you write off 70 grand of it through marketing and, you know, whatever. We can only use that net 30K on 1099 and small business owners. So your borrowers that are small business owners, it's important that you have that conversation. Then they need to get with their tax accountant, with their financial advisor, and let them know, hey, it's on your taxable income for those borrowers. For W-2s, it's pretty straightforward. You know, if they're salary, it's really easy. If they're hourly, we just need to see a history that they're getting, how many hours a week it is. For bonuses, commissions, we do need usually a 2-year work history to use the bonus and the commission outside of base salary. There are a few
Matt?
times when we don't need a 2-year work history. So say it's Taylor's trying to get in.
Yeah, I was gonna let you know. I was gonna see if I could reclaim host and see if you still have screen share privilege. But I'm not sure. I don't want to mess with it. You want me to try?
Well, I just let Taylor in. So if you just want to let me know when people pop up, because it's hard for me to see on my screen, I'll just
Yeah.
let them in.
I don't know unless they text me. So keep
Okay.
going. Keep going. Hey, by the way, for agents out there, we're going to have a Q&A session in just a few minutes. So hold your questions, write them down. We'll get to them.
Okay. Yep. And then, you know, we can, sometimes there are workarounds of the 2-year work history. If it's, you know, recently someone that's been in school and they just got a job, we need an offer letter. If they're in the same job, you know, same workplace, but they got a job promotion, just the offer letter, and we can use that new income that they'll be doing. If it's a single parent, you know, that wasn't working before because the spouse was bringing in the income and then something happened to where now they have to go in, those situations, as long as we have a offer letter, we can make that stuff work. And then the last thing that we need to look at is their assets. So this is to determine the funds for their down payment, their closing costs and reserves as necessary. This can be checkings and savings. This can be 401ks. This can be net proceeds from a house that they're selling. So there are a lot of different things that we can look at there. And it's really just to make sure that they have the funds needed to close, or let you guys know too, what they need to ask for in seller concessions. So, you know, that just gives us a good barometer of what people are needing. This is the other part is your debt to income ratio. So a buyer's debt to income ratio is a ratio between their total monthly obligations to their gross income. So that's before any taxes or deductions are taken out. A good rule of thumb for maximum DTI is 50%. So for example, if you make $60,000 a year salary, you earn $5,000 a month, 50% of that would be $2,500. So that means that their monthly payments for all debts, that could be cars, student loans, credit cards, plus the new mortgage they plan on getting, cannot exceed $2,500. So that's a good thing to go by. And remember, the mortgage payment, we'll go over this in a few slides, is not just the principal and interest. That's homeowners insurance, and that's property taxes. And in some cases, that's the mortgage insurance also. So we need to make sure that all those numbers are in line, which is important for your borrowers to get their information in soon. Not, hey, let's look at 3 houses. They love a house and they want to submit an offer and we haven't even started the process yet, because we don't want that to come up and, you know, get us later on. So how much for a down payment? You know, there's a myth out there that you need 20% down, and that's not the case. So with conventional, we can go as low as 5% and 3% in some cases. So a first-time home buyer is someone that hasn't owned a property in the last 3 years. So it doesn't mean this has to be your first time buying. You just can't have owned a property in the last 3 years. But then there's also Home Ready and Home Possible, which is also 3% down. It's a conventional loan. And this is based off more of the median income for the area. So for the Fort Mill area, the Charlotte area, it's 64,000. So as long as they make less than 64,000, they qualify for a conventional loan with 3% down. But Home Ready and Home Possible also allow you reduced mortgage insurance and a reduced rate, depending on your credit score. FHA is 3.5% down. And the thing to remember, or the people ask, what's the big difference between conventional and FHA? The rates are sometimes different. But the big thing is the mortgage insurance. So with FHA, it's for the life of the loan, where conventional, it goes away at 78%. You can request it at 20, but it'll automatically go away at 78%. And that's the big thing to look at too. But if someone, you know, is in a better situation taking an FHA loan, they can always refi into a conventional loan later on. And, you know, we can always have that conversation. USDA is 0% down, but remember that's property specific. So you're going to want to go to the USDA. You just type in on Google USDA property eligibility, and you'll be able to see, you put the address in, and that will let you know if the property is USDA eligible. The last one is VA, and that's also 0%. The crazy thing with VA loan is someone has a credit score above 700, they can almost get $1 million house for 0% down. So, and then we just got some changes to credit scores. So with conventional and VA, they're down to 620 minimums, and FHA and USDA we can go down to 580 now. The big thing is just because they have a 590 doesn't mean they'll get approved too. We just got to make sure that we can get approved eligible, and it depends in any case, even with the 620 conventional, why they're at that. Is it, a collection issue, or is it just they haven't had a credit history that long? This is a big one too. If you want to take a picture of this to explain to your borrowers that your mortgage payment is also based off not just the principal and interest on the loan, but the taxes, property taxes, and homeowners insurance. So we're going to collect a bucket in the beginning called, their escrow, their prepaid expenses of property taxes and homeowners insurance, but then a portion of their monthly payment will go to that. So then at the end of the year, their mortgage servicer will send a check to the county for their taxes and send a check to the homeowners insurance for the property, for the homeowners insurance, so they don't have to worry about that. The only other part of this that's not in here is if you have mortgage insurance, or they sometimes call it PMI. So that will also be listed under their escrow part. Here's another good picture to take. It's a document checklist for what borrowers will need. It's a little bit small, so I can get you a bigger copy if you want to email it to me, or I can send this over to Tommy. It's just a good rule of thumb. It's not always everything that people need, but pay stubs for the last 30 days. W-2s, we don't need all the tax returns unless they're a 1099 or a small business owner. If they're just a regular W-2 employee, all we need is their W-2. So we would need it for 2019 and 2020 now. Any kind of child support or alimony, whether they receive it or give it, we'll need paperwork on that. If they receive Social Security, 1099, or disability income, or a pension, they should get a 1099 at the end of the year. We'll need a copy of that. Down payment would be bank statements or statements from their 401k. If they are getting a gift from a parent or family member, there is a sheet that will be filled out. So it will be a gift letter, but then we would also need a copy of the bank statement showing where that money's coming from. And then, there's just a few other things on there, but if you guys want a bigger copy of this, I can always send it to you, or I can just send it over to Tommy, whatever easier for you guys. And then one other thing to go over, everyone is worried about their down payment when they're buying a house, but there are other costs that goes into this. These include the closing costs, which are the lender fees, attorney fees, appraisals, title work, and then prepaid escrows, which, like we talked about, are their property taxes and their homeowners insurance. This is a good one to send to your borrowers. 10 commandments when applying for a real estate loan. So you'd be surprised what we see people do. Do not buy a new car or lease a car when you're buying a house. Do not quit your job. Now, I would say, and don't go self-employed. So if you're a salary employee, wait to start your own business to after you buy your house. Don't go out buying furniture on credit. Don't be co-signing on any loans. So this is just a good thing. You'd be surprised what we see people do. No, you cannot get a loan for your down payment. You can't go to the bank and get a loan for your down payment. That's not going to work. So,
but Matt, can I put it on my credit card?
Yeah.
Sorry, I just had to say that.
Yeah. So, these are just some good things for people to do. I've had people change, get a job promotion or actually change job during the process, but they were in the same field. They got an offer letter, but they need to get with us before they do it. Just don't get mad at work one day and be like, hey, I'm quitting and getting a new job. Talk with us and make sure we can make it work before we make any of those changes. Here's my contact info. I'm sure Tommy can give it to you guys too, but there's my cell number, there's my email, there's my website, there's my application link, there's my Facebook page. I'm always posting, every day or every 2 days about the market and what's going on. And it's good information you guys can share if you want to, or take it and put your own spin on it. But yeah, we can open it up for questions now. I know Taylor is in here now, the branch manager for us at NFM Lending. You saw his picture earlier. But any questions for you guys? Anything you want us to go over?
All right, guys, ask away. Everybody's going to be quiet on Monday morning.
Taylor, is there anything you want to bring up or go over?
Yeah, I'll touch on just a couple things that I was listening in on. You'd mentioned that the VA is still down to a 620. We actually did just open that up effective today down to 580.
Okay.
So all government programs, FHA, VA, and USDA were back to 580, which was the norm before the pandemic. So I want to clarify that. You guys were talking about the down payment stuff. Good morning. And this is actually an interesting one because like Matt was saying, there's things you can do to get creative and then things that aren't allowed. And as long as we are in communication with the clients on the front end, we can help them navigate this. And that is, I cannot tell you how many times everything that Matt's talking about, whether it's, especially with the do's and don'ts, you know, changing your job or quitting a job or buying a debt, you know, new car, all that stuff. It's all manageable if it's discussed on the front end. So one thing I'm sure you all get all the time, which with the stall to talk to a lender, is that they're not quite ready. They're not buying a home for 4 months or 5 months. My lease isn't up for 5 months. You know, I'm working on my credit, blah, blah, blah. Matt just went over a lot of stuff, lending 101, which I know is good to have general information, but there's no way that we would ever be able to keep you guys informed on everything in the business at all times. It's constantly changing. And so that is the number one piece of ammunition for you to use with your clients, and also to really help you all protect your time, make sure you're dealing with bona fide buyers that are interested, which is you need to talk with a lender ASAP regardless. I don't care, regardless. If you're talking to me about buying a home at any point in the next 2 years, you need to talk with a lender. We may decide not to pull credit, that's okay, but we know the questions to ask to find out if we need to. But we may be able to save them on major problems later on with the documentation we need once they go under contract, if we just know their full picture 60 or 90 days before they go under contract, right? Mom gives me $1,000 every month. She gives me cash and I deposit it. Well, you're going to have to source that most likely. And if we know about that in advance, we can guide you to not put that money in or just have mom give you a check, right? But if we don't know about it, we find out about it in the process. That's when these problems come up, which any of you that have ever worked a single transaction probably have an example of this. So that's really, really important. The down payment stuff you were talking about, Matt, with, you know, you can't take it out on a credit card, which I know is kind of a, you know, a fun joke because a lot of people ask that question, but you can take out secured funds. So people that have a vehicle that they own free and clear, a four-wheeler, a boat, you know, anything that's real property of value that they can put a loan against, that's acceptable. It has to work in their debt to income ratio, but that's acceptable. FHA actually allows people to take a loan from a family member. A lot of lenders don't allow that. We do. And a lot of people don't even know that. But, you know, there's mom and dad or uncle or brother or someone that's not willing to do a gift letter, but they're willing to give the $5,000. Okay, well, let's just type up a note with a repayment plan. Let's make sure that the repayment fits into their debt to income ratio and we're good. Right. But those are things that need to be uncovered and maneuvered well in advance of going under a contract.
Taylor, I have a couple questions here from the audience. So the first one is, does a conventional loan have a down payment assistance program?
It does. Yeah, there is DPA on conventional. Their guidelines are more strict. The debt to income ratio is tighter, so you're going to end up with a lower purchase price, but they definitely do.
Okay, so just get with the lender because it's going to depend based on the situation, the credit score, and all the above, right?
Absolutely. The number one piece of advice that I can give you guys, again, we want to give you information about the lending process. I think the lending process is really, really important to be able to explain to your clients what it looks like. The very first step, and then what it's going to look like once you go under contract, and then what it's going to look like, once you're a week from closing and things like that. That's the good stuff to know. How you wire funds to an attorney, that's not going to change, right? But all the other stuff, we'll teach you anything you want. I would encourage you to get familiar and start, viewing your lender, whether it's Matt and us or someone else, as a true partner, and being able to tell your clients that, listen, they are the experts in this field and you need to speak with them, right? Because it's, I can't say it enough. You guys will take time away from the things that you should really be focused on with your clients if you get caught up in the weeds. And that's where you just want to be able to tell them, hey, let's call this person and talk to them. If there's a product for you, I guarantee you they have it. And if there's a concern that you have, I guarantee you they can address it. And it may be address it as in we realize it's not really a problem and you can move forward right now. It may be a legitimate concern that we just make them feel more comfortable about it because we give them a plan of action to get around it. And down payment assistance is one of those right now. I can tell you that is, I see agents set themselves up for failure with it, because if a client tells you all, yeah, I'd love to buy a house, I just don't have any money, naturally you're thinking down payment assistance. And I get that. But then that client gets excited. Oh, now I have an option to buy a house. They do what everyone else does. They get online, they start looking at homes, they find what fits and what they get excited about. And what they get excited about might work with one program and they might actually qualify for it, but on down payment assistance, they don't. Right. And that's just one example of, we think we're doing the right thing because we're trying to get them over that one obstacle, but it actually creates a bigger problem. And so if you all can feel comfortable saying, I guarantee you, I work with this group, I work with this person, I work with whomever for a reason. It's because the products that are out there, they have them, they're educated, they're going to ask you all the right questions, they're going to answer all of your questions, and they're going to show you every product that's available. And we're not going to show them USDA just because we don't want to do down payment assistance. We're going to show them both if they qualify for both. And we're going to talk to you all about it. And we're going to tell you they can go USDA 100% financing. Obviously, then you got to stick to these areas. Here's the purchase price that you can go to. Or if we need to scale back to North Carolina housing and do a down payment assistance, they qualify for that at this purchase price. Now you can go anywhere you want in North Carolina, but you're going to have to scale back to this. We just put the facts out there. Educated people make educated decisions, and then it sets them off on a path for success right away.
Taylor, we have another question. Do you do tribal loans?
Tribal? No, that we do not do.
Thanks. I think it's important that I learned a long time ago that I don't need to be pre-approving or pre-qualifying my clients. I need to send them to the lending specialist and let them talk about all the different range of products that might work. So as Taylor said, there's new stuff on the market. Things change every day. So make sure you always run by your lender the needs of your client, because you don't want to leave them hanging.
Taylor, will you go over the shop and lock program and the 6-month extended lock?
Sure. So both of these products are really strong in a rising rate environment, which I'm sure you guys know we just jumped into a couple of weeks ago. So the extended rate lock is something that most people are familiar with. You're buying new construction, you're not going to close, and you're under contract, but you're not going to close for 6, 7, 8 months. You're worried about interest rates. It allows you to lock in for that extended period of time. Right now, we just rolled back out the 6-month. We will roll the 9-month out again. But 6 months is typically enough, or at least close. They go under contract and they pick out some options, and next thing you know, they're within 6 months and we can lock. But it does allow us to lock at current market rates. There is a fee that they will pay, but that fee does get credited back at closing. There is a float down option. So if for some reason the market bottoms out again and rates get significantly better, then we can do a float down within 30 days of closing. So it's protecting your buyers against drastic increase in interest rates. And that gives a lot of people more comfort with the new construction. The reality though, is that this product in a rising rate environment is really important, not just on new construction. And that's for the buyer, and it's also for you guys. So we rolled this out. We were really excited about it actually. And then when rates started going down, we didn't really need it. But now that they're going back up, we do. We allow clients to lock an interest rate for up to 90 days, even if they're not under contract. So I know Matt earlier went over the process with you all, pre-qualification. We look at what they submit online or go over on the phone. They're pre-qualified. Then we collect their income and asset documents and we verify that it's a pre-approval. The next step that we take, and a lot of banks don't, is to go ahead and put it in front of an underwriter. And the underwriter is the person that they specialize in crossing the T's and dotting the I's. So until an underwriter looks at it, I mean, Matt and I can try and do the best we can with all of our experience. We're not the ones with the ultimate say so. So getting it in front of an underwriter is really important, and it makes that offer basically next to cash. But what it also does is it allows your clients to lock in an interest rate. And so if you do have people that are out shopping, you know, especially those people that, hey, my lease is up April 31st, right? They know they're going under contract soon, or it's up May 31st. And you kind of look at the time frame. Then once an underwriter does that certified pre-approval, we'll allow them to lock. They can go out with you guys confident that as the market's increasing, their rate is not. Still comes with the float down option if needed, but just big protection for them that the price point in which they're looking is actually going to still correlate with the monthly payment that we told them it would. For you all, it's also really important because it keeps your buyers qualified. And I will tell you, that is probably the scariest thing. We all know if we pre-approve someone for $200,000, they typically don't go looking at 150. They typically look at 200 and worst case 210 and 220, thinking that I'm going to negotiate and get a deal. It doesn't matter the market. They all still think that, right? So they're looking at 210, 220, which they don't qualify for unless you guys work a miracle. And then even if we get lucky and we get them on the 199, everything is this tight for the rest of the process. Well, imagine if their interest rate went up from the time of pre-approval. They are no longer qualified for that. And it happens all the time. It sounds crazy, but you qualify someone at 49.99 because you just want them to know where their cap is. And you tell them 5, 6, 7 different times in 7 different ways that this is the cap. And I would encourage you to, provide a little buffer or call me before you write your offer so we can make sure the taxes line up, all that stuff. Inevitably, it ends up, they go over just a little bit. And fortunately, we have flexibility where we help our clients out and we make sure that 1% debt ratio can always be fixed, but a 4% debt ratio might not be able to. And that's what creates those real problems and those late closings and those frustrated buyers. And ultimately, those are the ones that don't refer you people because they're frustrated. It's not a happy experience. And then you're back to the drawing board on generating referrals. And so my team knows that the best thing we could ever give you all is a smooth process. We have to have a smooth process. We have to communicate clearly and concisely. We have to set the right expectations, and we have to have everything done before the closing date. So that way everyone is happy and comfortable those last couple of days. Those are the people that generate the reviews and send you referrals. So again, going back to tie this in with the rate lock, that's something we can control. We cannot control a lot of stuff in this environment until we start collecting the pieces. But we can make sure that if someone is interested and they know they're going to close in the next 90 days, that they don't have to worry about their rate going up a quarter point and their pre-approval going down $10,000. It's critical. Does that make sense?
Absolutely. So thanks, Taylor, for going over that very detailed. Let me see. I think we might have a question. Okay, no questions. I wanted to go back and see if Matt or you, Taylor, could talk about that account opportunity, I think, with some social media content. Can you explain that?
Yeah. So with list reports, you get a daily shareable that you can do on all your social media. You also get a marketing kit for all your listings that you do. But it's also good if you're going to show houses, you can pull up that address and pull up some infographics for them. If you're going to do an open house for someone, you can do that for you. And List Reports creates it for you, or you can create your own. But we'll have different Facebook things. You can go right from Facebook on there, everything like that. The other part I was talking to you about is, the realtors that I work with, I set them up when they're with a whole marketing set for their potential buyers when it's whether it's bid over asking, buy versus rent, report card, real estate report card for the area. We can look at appreciation, cost of waiting, thinking that they're going to get a better rate, and what that could cost them 6 months from now instead of just making the leap now. So there's a lot of different tools we can get. With the list reports, I just need their email address and we can set them up with their free list reports account. So Tom, if you just want to get one big list and send it over to me, or if they want to reach out to me individually, whichever way works.
Okay, thanks.
And with the co-branded stuff, our NFM marketing team can create flyers for us. Just let me know if you have an example of an infographic you're trying to make. Just send that over to me, or I can show you some flyers that we already have, and it will be co-branded with us. We'll have your picture, your contact information on there. They can make it as a PDF or an image for you to share on social. Just send me over whatever ideas you're thinking. I'll submit it, and then I can send you the proofs that they send, and we can make any edits also.
What if I were to send you maybe a listing or something? You send me some templates I could post so the group could see.
Yeah, well, you can do it off list reports. Lauren has one too, so she can download a few for you and show you what they look like too. Or Tommy, create or send me your info that you want, and I'll send it for you, and you can just create them off some of the listings you have. It's easy to do.
Okay, thank you.
Hey, to elaborate on that, guys, we've obviously put a lot of time and effort into fine tuning our process. I don't know how in depth Matt got on that, but I will tell you we're very proud of it because it is officially a very well-oiled machine and it makes everyone's life easier. We also understand the other side of that though, is helping our agents and our referral partners. We don't just view anyone we work with as a real estate agent. If we're working together, then we're working together. And so we want to give back as much as we can. We had to start with giving back by guaranteeing that we have a smooth process for your clients once they come over. But now the give back, we have a lot of things we do, like Matt's mentioning list reports. There's things we could have follow-up meetings if you want and tell you, we do this for agents, we do this for agents, we do this. We're also very open to ideas because again, we view it as a partnership. We can all learn from each other and we can all help each other. So anything that you're struggling with, let us know, or anything you just, hey, this is something that I keep thinking about and I'm not sure how to bring it to life. Let us know, because we want to give back in any capacity that we possibly can that creates a mutually beneficial relationship and ultimately helps us help more people.
So I know we have a few brand new agents on, and what I want to say is there's no stupid question, because the question you probably have burning in your head right now, the rest of us want to hear it as well, or want to know the answer. So somebody stand up and ask that burning question.
I'll start it off to break the ice. If you're asking why is Taylor's face blue and everything looks terrible, I have no idea. I literally signed on and I've never seen it look this way, but that's just what it is. So there's the first stupid question. We'll get it out of the way.
You look fine on this end. Must be
Do I?
green.
On my end, it's like white and blue.
I look like a Smurf on my side, but I've been told that I look normal on the other. So
maybe that's it. You do look normal. There you go.
Well, Zoom always has issues, so we'll blame it on them.
There we
Okay,
go.
so this is Karen Toutant. I'm going to ask a question. I am newly licensed. Well, I will be licensed. I'm waiting for the commission. The question that I have is that when I was taking class for my licensing, I was told very adamantly by the instructor that we cannot send our guests, clients to specific lenders. Am I not crossing a line here if I'm sending them to you specifically, if I have a recommendation to you? Yeah.
Tommy, do you want to answer that or you want me to?
So I'm not, if I hear that question clearly, I mean, our job is to send them to a lender because we have to get them pre-qualified, pre-approved. It's just
Right.
a part of the process. So I'm not,
But we're not steering them to a specific person?
So,
Or do
okay,
we want to give them a,
steering, yeah, that's, so here's the thing. Yeah, here's the way I answer this question.
thank you.
So, and Taylor, you, I think we've talked about this before, but in the end, the client, yes, they make the decision. However, most of our clients, most of my friends, my sphere of influence, they want my input as an expert. And I'll tell you what I'm going to do. As an expert, I'm not going to let them waffle around and float around and bump into some lender out there. I'm going to introduce them to the lender that I have a relationship with, that I trust, that's been proven to close loans. And by the way, it's okay to have a partnership with a lender. It's okay to do MSAs, all of that stuff. At the end of the day, it's how you position yourself with your client, the influence and the rapport that you have. And I'll just tell you this, I've had a lot of people come to me with these online lenders that I know the person they've talked to somewhere up in the cloud, somewhere in another state, has not reviewed their documentation, has not reviewed their W-2s, and they've told them you're approved. So we have to stop that. And the best way to do that is to form relationships and partnerships with other professionals who can get the job done. And I can just tell you this, I don't have a lender that I work with right now that if I sent somebody, whether it's a friend or a stranger, they're going to go to them. They're not going to get lied to, because I don't work with those kind of people. I make sure that the professional matches my work ethic, my work standard, my ethics. So Karen, I think it's the way you position yourself and establish yourself as the expert with your client. And then when you make those recommendations, it's not steering at all. Does
Thanks
that
for
make
the clarification. Yes, it does. I just wanted to make sure that I was following the rule. That's it. I don't want anybody after me.
I
And
think
Tommy,
you're
you
okay.
answered. Yeah, and obviously you answered that very well. That's something that we can help you guys with as well. When they come to you and they're talking to you, as Tommy said, they're looking to you for guidance. It does not matter if you're brand new and you've never closed a real estate transaction. Day one, when that license becomes official, you are the professional. And until you're at a point where you really believe that I know what I'm doing and I'm the professional, you have to act like the professional and align yourself with professionals. And that will help, because in this business, I tell people all the time, if you are in this business because you care about people, then you will always make the right decisions. You may find out later that that was a mistake and fix it, because you'll be honest, and I told you this, and that's not the right answer, it's this. But when I told it to you, I believed that it was 100% the truth, and I believed